Hi there. I wanted to go over the Project 1 for Finance 420. So this is what it looks like on Canvas, right? And if you click on the Project 1 link, it goes through the overview of what has to be done on Project 1, and then it goes through all the details. Okay? So this right here is an overview of the project. Basically, you need to register on StockTrack for an account, and you have to do that even if you had used StockTrack in another course, because for student accounts you have to create a new account for every single class. You can use the same email, but you have to come up with a different username. Then you're going to make all your trades listed under Project 1 assignment within the StockTrack, and you're going to build a portfolio with at least with $10,000 of shorts and $10,000 of a margin loan. So basically, you have $100,000, and you're going to short at least $10,000 worth of securities, and then you're going to buy more than $100,000 worth of securities. You're going to buy about $110,000 worth of securities, and you don't have to worry about taking out a loan. It's kind of like if when you get a brokerage account, you have a choice. Do you want a margin account or just like a regular account? And a regular account, it doesn't have like any capability to give you a loan. But if you go for the margin account, it's almost like a credit card application, because then within a margin account you can take out a loan pretty easily. In this game, all you do is buy more than cash that you have, and the game will automatically give you a loan. Okay, so just buy more than the cash you have, the 100,000 you have, and the game will automatically give you a loan. So you don't have to worry about taking out a loan. And then your grading is going to be based on completing all the tasks and building your portfolio such that you pretty much don't have any cash left. There's going to be about a $10,000 short and a $10,000 loan. Okay, and so and don't do it too early, because I'm going to grade the projects after the deadline, and then I'm going to be looking for the shorts and the margin loans. So if you do this too early and then you kind of forget about it for like a month or something, you better at least double check to make sure that the values of the shorts and the margin loan are still there, because prices go up and down, right? So that's the overview of the project. Here are the details. You click this link and you go ahead and you can set up your account. StockTrack asks you for a lot of, I think, too much personal information. I wouldn't worry about giving it that. All I need from you is when you choose like your username, just do it in such a way that I can figure out who you are on Canvas. Because I'm going to go into StockTrack, pull out your information, your grade, and then I'm going to transfer it over to Canvas. So I just need to be able to figure out who you are. That's the main thing. That's all I need. The specific trading assignments like buying stocks, selling stocks is on the dashboard. You'll see that under assignments in StockTrack. Here it goes through the details on $10,000 shorted securities and approximately $10,000 of a margin loan. Okay. The shorting process will actually takes out a little bit of a loan, because you borrow the stock instead of money, right? And it leaves a little bit of cash in reserve as like collateral for the loan. So you can't really get down to zero. And so the main things I'm going to be looking at is the value of the loan and the value of the short. That's how I'm going to grade whether or not you did this. Here's kind of the rubric in terms of how the grading is calculated. Okay, so now I'm going to show you where you can get a little more help, including this video. So if you go to help here, just want to highlight this for you. You're kind of already here. I'm going to update this link because this video is died. It's no longer available. And then when you go into Stock Track, if you go under and you hit Portfolio Simulation, Portfolio Summary through the menu, you'll see this page. And this amount right here is the loan balance. No, it's a little hard to see, right? And you should see that loan balance being about $10,000. And then down here under the market value of the short position, that should be around $10,000. That's how you know if you shorted enough and you bought enough stock. All right, let's go to the Stock Track site. All right, so let me see here, Stock Track. Okay, so when you go to your dashboard, you see this assignments part here, and then see right here where it says Show Tasks. So you want to click that Show Tasks, and then it shows you all the different things you need to do. You see there's some couple videos to watch, and then there's some specific type of trades you have to do, and you have to do them a certain number of times, right? And so the videos, they're pretty easy to watch. You just hit the do task right here. But I will say you have to watch it till the end because it kind of measures it. And so if you just like click, watch, and then you like exit it or something like that, it won't give you credit, okay? So just watch the video to the end. And then the other things you need to do are certain trades. So you have to buy or sell stocks or ETFs. And we'll get more into ETFs later, but an ETF is a portfolio, a fund of stocks or bonds, and it trades on the stock exchange just like a stock. That's why it's called an exchange traded fund. Okay, and so the system cannot differentiate ETFs from stocks, so they trade pretty much exactly the same way. So you're going to need to do that about 10 times. And then you're going to buy or sell some mutual funds. Mutual funds, they're not exchange traded. They're traded directly with the fund company, either by yourself calling them up or going through your broker. And so the system is different for that. Then we're going to do some corporate bonds, treasury bonds. You're going to short a stock or ETF, and you're going to do that at least 3 times. And keep track of the dollar value. Keep track of the dollar value. Remember, you need $10,000 worth of short. Then you're going to trade using a limit order, stop order, trailing stop order, and then market order. Okay, so let's go ahead and do a couple of those right now. So first off, if you go under portfolio simulation here, you see where you can trade some different securities. All right, so I'm going to go ahead and do stocks. And the other thing you'll notice here, the market is closed right now. So I'm doing this, it's about 5 p.m. West Coast time. And the markets close around, I think, 1 p.m. West Coast time. And they don't open until about 6:30 a.m. West Coast time. Okay, so if you're not trading or working on the system during those East Coast market times, you're going to get this message, and it basically means that when you place your trade, it's going to go kind of like it's going to be held until the following day or Monday, depending on when you do the trade, and at which point the order will hopefully be executed, depending on the type of order you're doing. So I'm just going to do some Apple stock. All right, and the most basic form of an order to do is what's called a market order. And so the first thing you have to figure out, besides what stock to buy, and remember, the stocks have product codes on the exchanges, and those product codes are called ticker symbols. The ticker comes from, you ever heard of like ticker tape? It would be spit out of a machine, and it would, like 100 some years ago, the ticker symbol AAPL and a number would be on there, and it'd be spit out of this machine, and that's how people would get their quotes about what was going on. And so You don't see the name ticker here, but that's where the symbol comes from. And so first you have to get that. And the cool thing about it, they have, it kind of has a search function here. So if I start typing like alphabet, it'll kind of show you some companies that have that name. And so like if you want to buy Google, you see right there, GOG Alphabet Incorporated, okay? So anyway, I was doing Apple, and I'll do that. And then you have to decide if you're going to buy or sell. And obviously, if you're going to sell something, you have to own it first, right? So you can't just go on and start selling. Alternatively, because remember, when you look at the shorting stuff, what you do when you short is you actually borrow the shares first and then you sell them. And that'll be handled here with this shorting. So you need to short about 10,000, and so you would deal with that right here. You do a short order. If you want to get out of a short order, the terminology is you buy the stock back to cover your short position. Buy to cover. And so that's what this cover is for right here. It helps you get out of a short position. Right? So you shorted a stock. Hopefully the stock went down. You made some money, and now you want to get out of the short. You click the cover button here to buy back the stock and give back the stock to the stockbroker where you borrowed the shares from. Okay? So those are the 4 actions you can do in this simulation. Right now we're just going to do buy. And then we have to do a certain number of shares. So you have to think about how much money we want to invest. You got 100,000. I think I'm going to do about, I don't know, $5,000 or $10,000 per stock that I'm doing. And so you see it was currently trading around 237. You see that on the price here. And so I'm going to I'm just going to do about I don't know, 20 shares should be about $5,000. Let's do 20 shares. And you click that in, and you should see it'll calculate the estimated value. You don't know what exactly it will be because the market could change tomorrow morning when this order goes through. Okay? But that's the estimated. And then here's where we do the order type. Market, limit, stop, trailing stop. Okay? We're going to do a market first. And you remember from chapter 3, a market order is kind of like an order where you say, I just want to buy it fast and give me whatever the people are offering to sell these shares out on the market. That's called a market order. It's kind of like if you're familiar with eBay, eBay, you have the option of either placing a bid or buy me now, right? Market order is like buy me now. So I'm going to do a market order. I don't have to worry about this other stuff because it's just going to go through and take an order that's out there. Now I'm going to review it, okay? And I'm going to place my order. and you should see it if we go to the portfolio simulation and we go down to order history. We should see the order sitting there, and it's going to wait until tomorrow. I think this is it right here, Apple. Okay? And you see how it says open? Okay? Later on, when it goes through, it's going to say filled. All right? And after it goes through, then we're going to see it under open positions because now we own it. And you're not going to see it there now. Right now you see GLD. I bought some gold about a week ago. And so, but tomorrow morning we should see AAPL listed here under open positions. Okay, now I'm going to go back to my dashboard, and I'm going to go to user dashboard. You don't have to do that because that's automatic. And then I'm going to click here this little down arrow. It's a little confusing there. Okay, and so Let's see. The next thing we have to do is let's do a limit order. Okay. So I'm going to go ahead and do a limit order on a stock. And let's go ahead and I'm going to do Google Alphabet. You'll see there are two classes of shares. Sometimes companies issue two classes of shares where the shares, they have like an equal ownership of the company, but one share class will have more rights, more governance rights. And I think that's what we see here. I think the Class A shares, they hold more votes, basically. When the company goes to do a vote, like to approve something, like a merger or something, Class A shares, I believe on Google, have like more votes than the Class C shares. I'm just going to do the Class C shares. Actually, I'm curious here. Let's take a look at. So the Class C shares are about $234. The Class A shares, they're the same price, about $234. But yeah, I'll just do the regular ones, Class C. Okay, now we're still going to do a buy, and I'm going to do about 20 shares again, just under $5,000, right? And this time I'm going to do a limit order. And this is where I place a bid. I want to try to get a deal slightly better than what I could do on a market order. And so when we do this, you kind of have to look at the current price, the last price that went through, and kind of the range of prices for buying and selling the stock. If you go back to chapter, if you look in chapter 3, right, we talk about the bid-ask spread. And think about it, the difference between these two prices is kind of like for the dealer or broker, that's their profit margin, right? So if the dealer or broker is going to sell you a share, they're going to sell it to you at this market price. And if they're going to buy it from you, because you're the seller, they're going to buy it from you for this. Okay, so when you do a market order, you'll probably and you do a market buy, you'll probably pay close to that. If you do a market sell, you'll probably get close to that lower number. And with a limit order, you're probably going to try to get somewhere in between those two. Okay? Somewhere in between those two. So I'm going to do a limit order for 234.39. I want to buy it for 234.39. So I'm going to say that right here, 234.39. And then we have to specify how long do we want that order good for. Do you want it to be just good for today that you order it? Do you want it to be good till a certain date? Do you want to be good for forever until you say get rid of it? Because when you do a limit order, there's no guarantee that your order will go through and it'll be transacted. Because you're just putting out a bid out there, there's no guarantee that someone's going to want to trade for you, right? And so for the purpose of the game, I'm going to do good till cancel just so it stays there and I get credit for it. So let's go ahead and review the order and place the order. Okay? So let's do this now. Let's go ahead and do let's do a short. And I'm going to short a stock. Let's I hate to short Nvidia. No, I don't want bad juju on Nvidia. Why don't we short let's short Tesla. How's that? mean, if you have a little index, money into an index fund or retirement account, you probably own Tesla. So I own some Tesla, but I don't have extra as an individual security like I do with NVIDIA. That's why I didn't want to short NVIDIA. I don't want the bad vibes from that. All right, so now we're going to short it. Okay? And same deal as before. You can do a market or a limit order. Okay, and for us, we're just going to do, let's just do a market order just so it goes through. And let's go ahead and short 20 shares. And you see it's about 6,900. So I still need to do a little bit more because I want to get 10,000 there, remember? And so I'm going to review it and place the order. All right. Let's see. What else can we do? Let's do trailing stops here. All right. Now the trailing stop is kind of what it is a contingent order, and it's kind of a protection on something you already own. So let me give you an example. Let's say you own some. You know what? I'm going to go to our open positions because it's easier to place the order if you just go to something you already own, right? And I own this gold ETF. Why don't we say this? If the price of this gold ETF ever goes down 5%, I want to sell. Okay, so 5% is about $16, right? So let's do this. I'm going to go ahead and I'm going to go to actions here and I'm going to say trade. Okay, and so it puts this in automatically, GLD. It has already made how many shares I have, and so I'm going to sell, but I'm going to do it I'm going to do a stop order, and I'll just say if it ever drops to let's say 316, I want to sell. Okay, in fact, I'm going to just do 10 shares. If it ever goes down to 316, I want it to sell those 10 shares. Okay, and I'm going to say good till cancel. Review the order. Looks good. All right, now I'm going to go to open positions again, and I'm going to do a different type of trailing stop order. I'm going to go to gold again, and this time I'm gonna sell. I'm gonna do 10 shares out of my total 30, and I'm gonna do not a stop, but let's do a trailing stop percentage. Okay, and this I'm gonna say 5%. And what that trailing means, the original stop order, I set a hard number when to sell. What a trailing does, as the stock keeps going up, it changes that sell point. So the sell point is always, for the trailing stop percentage, it's always 5% below the high number it reached. So as my investment goes up in value, it'll automatically sell it at 5% below the highest point it's reached. Right? Because if you do a stop order and your investment goes from $100 to $1,000, and you set your stop order for like 90, it's never going to reach that, right? So it's kind of smart to do a trailing order because that way the stop point kind of moves up with the stock as it goes up. So I would do 5% if, let's say, if I was a trailing stop percentage, or if I wanted to do trailing stop dollar right here, I could tell it, if it ever drops, $16 below the high point that it reached, then sell it. So that's the difference between all those stop orders. And it's just a safety. It's a contingent to automatically get you out of a trade in case something bad happens, the price drops. And it makes it so it's automatic and you don't have to be thinking about it. Now, this is probably not a long-term investor point of view. This is for someone who's more of a trader, and they're trying to make some short-term decisions and kind of optimize, right, where they're buying and selling. They're not looking just long-term; they're looking short-term as well. Okay, and so you're going to do something with the mutual funds as well. And the mutual funds, they have these 5-letter tickers. You can Google a couple of mutual fund companies, and you put those in. And the nice thing about it on here is you just put a dollar amount. You don't have to put the number of shares. You put a dollar amount. Because when you invest in a mutual fund, you send them a specific $10,000. Boom, there it goes. Okay. And then you see here bonds, and you have a choice of different bonds. You can do corporate or treasury. You're going to do both, right? So, and this game has it such that they have some different bonds here all set up for you. So it makes it kind of easy. Okay, so just buy a couple of those, and then when you think you've got everything done, go to your portfolio summary here, right? And what you're looking for is a loan balance of about $10,000, and you're looking for a margin loan of about $10,000. I'm sorry. That is the loan balance. That is the loan. I'm sorry. So that should be about $10,000, and then your short sale should be down here. Should be about $10,000 as well. So that's what you're looking for. Do all those trades, and then buy enough stuff, short enough stuff to get those 2 positions there. And any more questions, just ask me in class or on the Ask Questions Here discussion board, depending on your class. So thanks a lot, and I'll talk to you guys later. Bye-bye.